Good morning, guys. How are we all doing? So Dan from Trading with Dan here. Happy Saturday, everybody. Hope you guys have all got a great weekend planned. I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. And once again, we have the good old China FUD. This is the latest iteration of basically the same news that just gets rehashing. But nonetheless, all we realistically had, though, we were at a level, at a resistance stroke support level, resistance realistically, trying to poke our way above. Couldn't get any acceleration, also ran into a 4-hour 9, and then came back down and tested our lower level of support. I mean, the most important takeaway for this is that we haven't closed below it at the moment, but obviously that is not something that can't happen in the future, but just something that hasn't happened at the moment. And then we didn't actually take out any of these wick lows either. So whilst it clearly does not look good, this is some serious damage to the chart. And in a way, I kind of wonder, is that the name of the game? Is that the name of the game? I have seen some rumors that it's just basically to distract people from China printing hundreds of billions of their monopoly money to I guess all money is monopoly money. I'm not picking on China. You guys know I say those dirty fiat Fed coupons as well. But yeah, China printing loads of its money to bail out their pretty much big four state-owned banks from Evergrande losses. But yeah, whatever the reason was, it basically did reject us from level to level. The only real takeaway, the only real important thing is that we hold this support level. We do now have a nice lower high as a point of basically turning the medium term time frame bullish. I don't know if you do want to look at this as a higher low, but I guess it is a higher low. But we are still dangerously close to the support area. So if over this weekend people can kind of see through the China FUD, kind of not puke their positions, we can start to drift back up. It would be potentially a clear shot above this resistance level, and then obviously taking out this resistance level for the second occasion on the basis it takes out this lower high here. We could then obviously see the acceleration up towards our more important levels of around 48,000. So yeah, we're all to play for in the Bitcoin chart. I will just cast your eyes over to areas where things like this do happen, where we do kind of have a downward sloping trend. We do look bearish. We do even break below super macro, absolute dastardly areas of support that can't be lost. And then that does actually give us momentum, not only to go from bottom to top of range, but then ultimately take out the top of that range and then form a new top of a range. So, and if we actually want to look at how much of a percentage move that is from top to bottom, that is just the cheeky 80+%. So yeah, not saying that this is what's going to happen right now. I'm just saying that things can obviously look bearish, but whatever we're in that sideways range and whatever we are maintaining the lows or just about maintaining the lows, it is not to say we can't make that move up, break that downtrend, and then accelerate to the upside. So yes, let's have a look at the Ethereum Satoshi pairing. It is doing similar price action at this important horizontal. It actually did take out the wick lows of these lows here, but yeah, looking weak here. So that is obviously not a good barometer of risk, but we are obviously at a critical point where Bitcoin will either accelerate to the upside or to the downside. At which point we would expect weakness in this, so that has obviously been preemptively reflected in that. The Bitcoin dominance as a whole, though, looking like it could potentially make a move down, so not looking as bad there. If we do want to look at stocks, because obviously stocks are important, because well, to a certain extent, minus the China FUD, we are getting driven by the overall worries in the global markets over Evergrande. But yeah, stock markets had a very good close here, and an extremely good close in all fairness, within striking distance taken out this horizontal, at which point we're just expecting onwards and upwards to new all-time highs. Yeah. Yeah, very good close for stock markets. I think people will start to look at these closures. They'll start to look at the Bitcoin price. They'll start to also look at, well, maybe not so much the DXY, but the DXY is certainly stalling out. They could look at this as you can't really look at this as a bear flag. You could look at this as if you want to start to bring in new formations that confirm your bias, then you could look at this potentially as a diamond reversal. But the point anyway with this is that we have got this area we want to break below to move down, or if we stay or hold above, then we move up. But realistically, things are not looking too bad. We are potentially at a point now, just a point in the market where market participants kind of think jobs are coming back, things are looking good in the economy. I think they're mistaken, but either way, I think the market is at the moment pricing this in, also reflected in the 10-year yield, as you can see here. The 10-year yield increasing, which is obviously a sign of increased risk appetite, but also this will lend itself a support to the dollar, and the dollar vice versa lending support to this. They're basically, obviously, if you think about bonds are basically deferred dollars. So obviously, if the DXY goes up, it's like the value of your deferred dollars go up, so therefore the yield goes up, therefore obviously this is the yield going up. So yes, there is obviously that at the moment. People thinking that the Fed will start tapering, but basically what the spanner we've got coming into the works with regard to the Fed tapering, not this is a spanner for us, because we obviously just in asset markets we just want more liquidity, more easing, but and no tightening. But the spanner in the works is going to be the jobs numbers, because they are expecting people to have to go back to work, and I think a lot of people are not potentially gonna do that. And Goldman Sachs also have been forecasting weaker job numbers than other market participants, and maybe the Fed is expecting. So it ties into what I said in yesterday's video, how the Fed appears to be wanting to tie its decision making more closely to the jobs numbers, and I think maybe it suspects the job numbers are going to come in weaker, and that is going to allow them to basically do nothing, because they can't do anything without basically popping the everything bubble. So yeah, that is potentially what's going to happen. At which point we will have to expect bond yields to rally, which obviously this means this will be coming down, because this is the price of the yield of the bonds. So yeah, the bond yields will come down, and then there you go. We shall end up in a slightly difficult market, but it will potentially be stagflation, which will be potentially good in theory, good for crypto asset prices. So yeah, but this is obviously clearly signaling to the market something, and like I say signaling to the market something. I think the market has been signaled something that it is now basically reacting to. It is now basically selling bonds in anticipation of, and that is basically, I think they just are expecting a decent recovery. But yeah, like I said, it's not like I'm being a pessimist. The jobs numbers are out there and they're not looking good, and the Fed just seems to have decided to tie more closely to the jobs numbers, as opposed to inflation. They obviously have a dual mandate of inflation and jobs and full employment. So yeah, there we go. Let's have anything else. There's nothing else you need to look at on here. Oh yeah, sorry, the Ethereum USD price, we'll have a look at that. It is also at this support area as well. So I mean, there is obviously these markets are clearly interlinked, obviously the Ethereum, the Bitcoin, and the Ethereum Bitcoin. But yeah, they're all at important levels where we kind of have to make that move to the upside. I mean, the one thing I just would look at is the stock markets. And yeah, that's basically what I look for. The way that I see it, we're either going to see this great recovery, in which potentially is going to be good for crypto, or we are going to see a stagflationary environment, which is potentially good for crypto also. The only environment that is bad for crypto is a deflationary environment, and I think we are not going to be entering one of those anytime soon, although it is a risk. It is a clear risk, especially when everyone is fully focused on inflation. There are clear deflationary forces that could come into play, such as an easing of supply chains, a reduction of obviously consumer demand, and yeah, there are things that can lend themselves to deflation, but I don't think they're going to play out at quite yet. I don't think so. But yeah, let's have a look at the stochastics now for Bitcoin. 4 hour has come all the way down and is looking to turn back up. So 4 hour could give us that support that can obviously hold this important level for us. 10 hours stalling out from a low level, but if the 4 hour does kind of drag us up, the 10 hour could resume its upward move. Similarly with the 12 hour. Daily is pointing back down again, so that is not ideal. 2 days sort of just turned back down again, so that is not ideal. 3 days still diving, but this has been coming down the whole time and potentially looking to turn back up if we can get that sort of move. If we can just hold this support level, basically. 5 day coming down, weekly actually starting to turn down now from a high level. Could potentially draw a trend line there, but yeah, weekly now turning down from a high level, and bi-weekly is sort of floundering at these low levels, but overall it is a pretty obvious what we need to do. Stochastics aside, we do need to hold this level. We need to bounce here and we need to get back towards 45, in which case things will start to look good for the stochastic read, for holding the support level, for then taking out this resistance level and taking out these lower highs. So we know exactly what we need to do. Weekend price action, where you guys kind of know, I just expect sideways or reversion to mean, and so maybe we do get some weakness, maybe some more coordinated FUD comes out, but if I had to guess, I just would kind of be targeting a drifting upwards to sideways, maybe getting up as high as 33.44 before having to make a decision when the CME is open on Sunday evening, and then obviously it's traditional market futures. But clearly, if we come and take out these lows, I mean, it's basically 40,000. If we come and take out 40,000, then we kind of have to expect an acceleration to the downside. And yeah, and a very ugly looking chart to boot at that point. So yeah, there we go, guys. Remember, this is not a financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.